Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to Forecast Update Live, a video series from EverAg Insights, where each month we will gather to discuss our dairy market forecast. I'm your host, John Spainhour. We're joined today by Erica Medke, Matt Gould, and Phil Plord. To get us started, let's take a look at the markets. As of Tuesday afternoon, April 4th, CME block cheddar is at $1.82 per pound, down 14 cents from last month. Barrels are at $1.79, up 22 cents. Butter is sitting at $2.33 per pound, down 2 cents, while CME non-fat dry milk is at $1.16, also down 2 cents. The Class 3 6-month strip is at $18.54, up 28 cents on the month, while Class 4 is at $18.32, down 62 cents. Phil, any big changes to the forecast this month?
Nothing major, but definitely a little bit more than what we saw a month ago. I think our view has shifted where we see a little bit more milk production than we did a month ago and a little less demand. And that's really played its way into our Class 4 forecast. So whereas last month we were at $20.02 for full year Class 4, now we're at $19.58, which is a 42-cent reduction. On Class 3, we're actually up a tick. That reflects some of the strength we've seen the past couple of weeks and maybe lows that aren't as low, but not a big change. $18.63 this month compared to $18.41 a month ago, up 22 cents.
Now that we know that, Erica, what factors favor the bulls these days?
Well, first off, I think we have to remember where that price level is, as you just reported. So in comparison to where we're at today, the prevailing range for cheese seems to be, $1.80 at the bottom, $2 at the top. So $1.80 today, $1.82 today certainly says we can be moving higher. Now, the other thing fundamentally, we're not full of cheese. First off, our plants aren't running solid. And second off, our inventories aren't that big. So as we think about the inventory build that has, or I should say hasn't necessarily happened so far this year, USDA has reported that we're only up 1 million pounds in terms of total cheese numbers, when normally we're up 33 million pounds on a 5-year average number. Additionally, as you think about what sets the price, it's cheddar cheese in Chicago. American-style cheeses are actually down 1.7%. On the butter side of things, we still see product moving. Promo prices have been very good, and at butter prices that are in the $2.30-ish range, again, compared to last year over $3, we've got quite a bit of space to move higher there. On the non-fat side of things, I would say one of the big concerns is the California flooding, that any more impact in that space, that we will see less milk in our largest butter powder producing state in the United States. And then just from a producer perspective, we're not expecting any fireworks in terms of milk supply growth there. As we look at margins, they're in kind of ho-humish territory, certainly not pushing on expansion. And if you look at the big boost in feeder cattle prices, those cows might just be worth more as beef.
Thanks, Erica. Matt, you argued on the bearish side of the ledger last month, and it appears you're still there. Why is that?
Yeah, I think there's a couple of reasons. The first is demand is still facing strong headwinds. Export headwinds remain in place, and we have not seen fireworks in terms of global demand. We have seen China come back, but not in any kind of major way. Southeast Asia remains weak. And domestically, demand remains challenged by kind of a challenging economic environment. So broadly speaking, dairy demand is tepid. And then at the same time, we're seeing global supply growth. And so in a tepid demand environment and rising milk supplies, I think it's hard to get too bullish. And as a result of that, that's why I'm pretty squarely in the bear camp.
Thanks, Matt and Erica. Okay, now it's time for a segment that we like to call our favorite look. So I thought what we'd do this time is focus on exports. Specifically, take a look at this chart, which is CME barrels versus the EU mozzarella chart. And one of the things we can look at here is during the week ending February 11th, mozzarella prices in the EU dropped to $1.35 per pound. And that was a 40% move from the price range they were in at the end of Q3. We presume that the big reduction in U.S. mozzarella prices created a major challenge for U.S. exporters, But so far, we can say it hasn't when we look at the export numbers. At the same point in time, it probably wasn't a coincidence to see the CME barrel price sliding at the same time that U.S. manufacturers had to make cheddar because they couldn't move into mozzarella international markets. The big question that we want to look at here is, did the U.S. buy back some sales when the CME barrel prices dropped to $1.53 per pound? And what does that recent rebound to nearly $2 per pound do for medium-term prospects? In short, the way I would look at this chart is to say our exports are very much dependent on where the international price is. One of our main competitors would be EU mozzarella cheese, and that cheese price moved significantly lower. So the question, I guess, again, is now that the EU price is at $1.50, the US cheese price is roughly $1.80, and New Zealand is at $1.84, where does that put us in terms of exports? Okay, that'll do it for this month's episode of Forecast Update Live. Thank you to all our panelists. Thank you to everyone on the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share us with a friend. We'll see you next month for another edition of Forecast Update Live.